Good morning and welcome to this weekly markets update from MRC Markets. There's the 19th of August 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. Just going to review what happened in the markets last week and give some sort of outlook for the week ahead. For any new followers out there, I'm not making any trade calls or recommendations. You do trade at your own risk. If you could please read our full disclaimer, which is on our website at www.mrcmarkets.com, that will be most appreciated. And we have three moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100 simple, and the gold is a 200 simple moving average. Okay then, first of all, let's go to the Forex calendar. So doing this video on a Tuesday, normally do it on a Monday. Basically yesterday was just such a quiet day in terms of data, I thought I may as well just start today. And it was a very sort of quiet, choppy day in the market. It's just a classic sort of Monday action. So let's go through this data in terms of just sort of the high impact data. What are the key things to look out for this week? So today at 9:30 we have UK CPI year on year. That's forecast coming at 1.8% from the previous 1.9. At 1:30 this is UK sort of GMT time. So at 1:30 got the US building permits, we got CPI and of course core CPI out at the same time. Tomorrow overnight, for any of you trade the Aussie dollar, you got RBA Governor Stevens speaking. At 9:30 AM, the MPC asset purchase facility votes and the MPC official bank rate votes, both expected to stay the same there. At 1:30, for any of you trade Canadian dollar, got the Canadian wholesales, so the month-on-month figures. Forecast is much weaker than the previous number actually. So the previous was 2.2%, and the forecast is 0.4%. And at 7 PM in the evening we have the US, the FOMC meeting minutes, so do keep an eye on that. It should be very volatile as always. And on Thursday overnight we have Chinese HSBC flash manufacturing PMI. At 8 AM we have the French flash manufacturing PMI, 8:30 German flash manufacturing PMI, and of course there are quite a lot of mid-tier data as well in between that. Obviously most of them are sort of flash manufacturing PMIs and services PMIs, so do keep an eye on them, because sometimes if all of the mid-tier ones are sort of good, if they're all bullish, then obviously the market can go up, and vice versa. So they do have an impact. Most of them sort of come in, they're either one way or another, in terms of my experience. At 9:30 we have more UK data, so with the UK retail sales month-on-month numbers this time. And at 1:30 of the weekly unemployment claims out of the US. At 3 PM we have US existing home sales and the Philly Fed manufacturing index. And on Friday, to round off the week, at 1:30 we have some important Canadian data. So you've got the CPI numbers, the core CPI being the high impact there, and core retail sales both month-on-month. At 3 PM we have the Fed Chairwoman Yellen speaking, so do keep an eye on that. That could end the week in a volatile way. And at 7:30 PM, later than normal, which is quite interesting for a Friday, especially to round off the week, of ECB President Draghi speaking, so keep an eye on that. And if you have overnight positions, etc., etc. So could really change the week there. So the weekly candle closes will be very interesting on that Friday, because it could really all change on that Friday afternoon / Friday evening. Okay then, let's go towards the charts and what is going on this euro. So let's have a brief look at the weekly in terms of the overall context. What have we been talking about on this weekly chart is this fib move here. That's the current move in place. That's the fib from the low of 2013 to the high of 2014. And let's talk about last week. Last week's candle, a slight higher low than the previous, but pretty much flat. Still a red candle, and still it struggled to get above the 200 week moving average. But of course we've got a nice bounce of the 100 week. So it's currently just chopping in between these two key moving averages, and of course this key support being this 133.69, and of course in terms of any sort of round numbers, in terms of sort of 50 pip increments, the 133.50s is a key level as well. So it's pretty much all about 133.50s in terms of this week. Well, in terms of all the time frames, actually, I'll show you on the shorter term stuff. But in terms of this weekly chart, that is it, in my opinion. It's just the weekly close will be very interesting this week. If we any close above the 50%, then I still think the bias has to be towards a rotation towards this upside. But of course, we need to have some sort of green candle here, because it is, in terms of the weekly candle closes, they are getting lower and lower, so it is technically still continuing to slide. But we do have these lower wicks forming, especially on the last sort of 3 candles, as the buyers are still trying to prop euro up here. So very, very interesting levels that we're sitting at currently. So let's flip it towards the daily. What's going on? I mean, you can see here that 133.50 key line in the sand on this daily chart. We've had 6 candle tests. Interestingly, on those, I'm just going to zoom in a little bit more actually. You can see, so we've had 6 candle tests, and they've basically been in two sets of 3. And each time they've made high lows, came back down high lows here. So keep an eye on where we're currently sitting at. This current daily candle will be interesting. It definitely needs to close above if it's going to rotate higher. I mean, I think a daily candle close below, and then I reckon we'll see some sort of move. Well, I mean, it does depend on the weekly close, I suppose, but then that 61.8 definitely comes into play here, I think. But in terms of daily chart, I personally do think it will hold above, but of course we have had multiple tests and it's struggled to pop up, and yes, it is making lower highs as well. So it's very interesting. It's going to break out very soon, I'd have thought here. You can see it's just in this sort of tight, sort of triangular sort of wedge pattern. So I definitely think this week we'll get the breakout either side. I mean, especially as it's sort of squeezing in between this range, you do tend to get a breakout. So yeah, it'll be very interesting to see what's going on. But that's pretty much it in terms of the daily. 4 hour, same thing. You can see it's just, I mean, there's been some really interesting sort of, there's still, especially on the shorter term time frames, there's still some interesting price action, interesting moves. Of course, it's not moving that wildly in terms of volatility, but in terms of the sort of round numbers, you got obviously the 133.50s and then 134s, nice sort of current resistance on the 4 hour. So keep an eye on that. And then if you flip it to the 1 hour as well, there's always been some interesting opportunities. Nice sort of reversal candle there. Remember, bearish engulfing there. Got a brief sort of scalping opportunity. Nice sort of reversal there. Nice pop up. So, and you can currently see here, nice lower wick. We've already had some sort of brief bounce up here on euro. But that's pretty much it in terms of this. In terms of this euro chart, you can see it is quite choppy. It does look like it wants to have a breakout, and hopefully we will get that soon. Then we'll get some interesting momentum on this euro dollar chart. Cable on the weekly chart, what is going on? It's still continuing to grind low. We've had 6 red candles in a row now on cable, and I still think in terms of overall perspective on this weekly, it's all about this fib here. Of course, we're still a long way away from that, but it can come around quite quickly. But in terms of over the next few months, I think I would not be surprised to see it come down to this. But of course, the first sort of target I would have thought for the bears will be this 50-week moving average. Now it currently comes in around the 165, 60 levels. 165, 60 levels, sorry. And the only other fib move that I think is of interest is this one here. So, and the reason being is because it's the fib move from the low of 2014 to the high of 2014. And interestingly, we did have pretty much, I think it just closed below this 50%. Yes, it did. So we had that weekly close below that 50%, and that 50% comes at one spot, 67.21s. In terms of the key round numbers, surprise, surprise, it's the 167 you can see there. So that is technically the key support. So in terms of this fib, I'd still say it's in play. I mean, I wouldn't think, yes, because it's closed below the 50%, it's going to come down to the 61.8. In terms of a key round number here, I think this is still definitely key support, and I think unless we get a weekly close below that, then you can sort of be on that 61.8 and then the 50-week moving average. But I would not be surprised. I mean, it does look quite heavy and bearish still, but I wouldn't be surprised if it did continue, try to grind high. But you can see here on this daily chart, in terms of sort of yesterday's daily candle, tried popping up, but it closed below the 50%. So previous support on this cable chart, as you can see there around to the left, is acting as previous resistance, but of course the 167 is still in play. So that's definitely the key line in the sand this week in terms of sort of intraday trading, in my opinion, on the daily chart. So if we flip it towards the shorter term time frames, this is the 4 hour. Interestingly, we had a gap over the weekend due to Carney speaking on the weekend. You can see that's pretty much filling. I sent a tweet out yesterday saying it looks like it's sort of gunning for a gap fill. That was actually right there, and then it did pop up, but you can see it has pretty much filled this gap now on cable. So I wouldn't be surprised to see it get a brief pop up here, to be honest with you. I mean, in terms of sort of smaller sort of intraday stuff, so let's just flip it towards the 1 hour. I think you've got a couple of sort of interesting fib moves here. I think this will be one there, so that's from that swing low to swing high. And I think the counter move, if any sort of bears are thinking the market's going to keep on falling down, I think that could be an interesting one there. And that 50% comes in pretty much on the 1.6750 level, so nice 50 pip increment there, keep it nice and simple. So they're definitely two key levels to keep an eye out for this week. This 167, that coincides with the gap low, and that 167.50 towards the upside if we do get any sort of brief bounce. But yeah, it is looking quite heavy. I mean, you can see we've just had a 1 hour heavy sort of candle there, but it did close above. Actually, no, or did it close? Let's have a look. Yeah, it did close above, but you can see it's already started to pierce below already, this 167. So that's the view on cable. Nothing else I think to speak about there on cable. So you've got the other fib moves, a few key levels, shorter term time frame setups as well. So let's move towards dollar Swiss. And what's going on the dollar Swiss? You can see last 3 weeks candles, key upper wicks there, and last week's weekly candle, a lot of people would say that's reversal. The problem I have with it is that it's not really off any sort of clean or sort of clear fib. That fib I think is the main one on this dollar Swiss. That 50% comes in at 0.9268. But in terms of key levels, you can see it has come off one, and that is the 0.91. Big round number there, big sort of option expiry. I would have thought that would be. So do keep an eye on that. But you can already see this week's candles starting to sort of grind higher already. So we may get another upper wick, but it may also want to come up and test these moving averages here, the key sort of 100 and 200 week moving average as well. But in terms of the weekly chart, that's the view towards the downside. And then I've just zoomed it here on the daily, because in terms of fib moves towards the upside, if you think it's going to grind higher, and it may well do, then that's the fib moves to keep an eye out for. I've spoken about that the last sort of couple of weeks really, but you can see it's just been sort of chopping around here. But you can see a lot of upper wicks there, so the sellers are definitely coming into this market and wanting to push it down. So I would not be surprised to see it come down to this 50% marker, which comes in at 0.8985s. Or maybe even around this 50-day moving average as well. And in terms of the shorter term time frame, so the 4 hour, nothing clear popping out apart from the sort of trendline resistance. You can just see here lower highs coming in here on this dollar Swiss on this 4 hour chart. Nice upper wicks, nice sort of reversal candles. That was a nice one there. We had a big sell off, of course, when the buyers came in and create that lower wick. But you can see this previous 4 hour candle, nice upper wick, nice off the trend line. Yes, it is a green candle, but you can already see that we start to sell off on this dollar Swiss already. So that's pretty much it on the dollar Swiss. So we've got the 0.91 handle, we've got a nice weekly setups with daily setups, 4 hour moves as well. So that's the view on dollar Swiss. Let's flip it towards this Aussie chart and what's going on in this weekly. Last week's weekly candle sort of followed on from the previous week's candle with a nice bit of lower wick there. I mean, I personally think it may come down here. That's the fib from the low of 2014 to the high of 2014. But you can see this 50-week moving average is currently holding above this, and of course there is a big level which is currently holding on this weekly, and you can see that's the level is pretty much those you draw the line on this weekly pretty much where those the candle close lows are on those two candles there. So that comes in at 0.92, pretty much 33s there. So very, very technical stuff on this weekly chart. We've had 1, 2, 3, 4, 5, 6 tests of this level, and last week's candle was a pretty, I mean, it's not an amazing reversal, but it's a green candle. It's got a bit of lower wick. It was also a higher low as well, so you can already see this week it's started to sort of pop up already, and it well could sort of grind higher towards this key resistance as well here on the Aussie at the sort of the 0.94. You've got 0.9450s as well, so maybe it's still just going to continue to chop in between these two levels, which we've been speaking about for a while, to be honest, on this weekly. I mean, you can also see on the daily as well, the two levels, you just chopping in between. I mean, yes, on the daily, but in terms of daily closes, you can look at that level there, which is 0.9218s, and then you've got 0.94, pretty much 0.95 handle there as well. So I mean, in terms of a range, it's a perfect sort of range, really. Plenty of opportunities that have arisen. You had that nice sort of reversal candle there, and it's grinded high. That perfect reversal candle there off the 0.9450s daily, and then a nice sort of rotation towards the downside. And if we flip it to the 4-hour chart, there's plenty of sort of interesting ops as well. So I've just flipped it towards the left there. You can see nice sort of reversal candles there, nice sell-offs. And you can see some interesting sort of bullish candles there, nice pierces below, closes above, rotations towards the upside. So it's all about the range really here on this Aussie chart. In terms of sort of fibs, nothing major. The only thing actually which is quite interesting, I think we spoke about this last week, we had this fib move here, remember, that played out. So the next one there, you could extend it towards the low, and I think, well, potentially to extend towards extend the lows, extend the highs down. That didn't quite play out, but if you extend the high there to that same high of that previous move, then this 50% comes in at 0.9353, so coincides a nice 50 pip increment as well. Nice sort of an option expiry level, I'd have thought. So you've got that move there as well, which is also previous resistance. So it looks like it wants to grind higher towards that level, and of course we do have the 200 SMA as well on this 4-hour chart at that level. So, and interestingly on the daily, we're currently sitting around the 100-day moving average as well, and also that 50-day moving average is creeping down towards that fib and that round number as well. So that should be definitely an interesting level if it does get there. And of course it is struggling at its 100-day moving average currently as well, which was also key resistance around there. So that's it on Aussie. Quite an interesting chart. I mean, yes, it is chopping around, but there's still some interesting levels in terms of sort of intraday trading. There's definitely some interesting levels that are in play on the Aussie. Right then, let's flip it towards gold, and what's going on. The same setup is still in play on this daily chart, and that is the move towards the upside. So you've got the fib from the low of June to the high of July. Nice uptrend, retracement down to the downside. We have a nice sort of bounce off the 61.8. It grinded higher. We then got capped at the counter move, which is this move here. Bam, off that 61.8, off the 50% that closes below the 50% at that 13.12s, and we are rotating towards the downside. So it's still all about these two fibs. You've got that fib move there towards the downside, the move towards the upside. This one is currently winning at the minute, but you can see, look at those moving averages there on the daily chart. 100-day moving averages acting as key support as well. So it's in pure sort of choppy mode at the minute. I mean, even if you just draw these two fibs up, you can see in terms of sort of levels, it's pretty much self-explanatory. And I'd personally just leave it as it is there in terms of sort of intraday trading as well. They're the levels to keep an eye out for. So you've got the 50%, the 61.8 towards to the upside, which has been acting as key resistance, and then you've got this big 50% at 12.92s, which has been acting as key support, and of course this is 61.8 as well. So you've got 4 big levels there, and I think anything in between this this zone is pretty much no man's land, apart from the 1300s, and that's why I think we're chopping around at the minute, because that's the sort of key line going in between that, and it just needs to decide where it wants to go. That'll obviously be a big, I would have thought, long-term option expiry level at 1300s, and that's why we're getting a bit of an indecision at the minute here on the gold. And I've just flipped it to the weekly. Actually, in terms of the weekly candle closes, you can see a couple of weeks ago we had that nice bullish close, although it did have a bit of upper wick, and last week's candle did close above that 1300. So in terms of sort of bias this week, yes, it is quite choppy, but I still think the bias is towards the upside here, and of course with the 50-week moving average as well on this fib, so you've got an extra bit of support there to give it some sort of slight bias, in my opinion, towards the upside. So I'd personally be favouring longs here on this gold chart. And that's pretty much it in terms, I mean, look at the shorter term time frames, nothing major of interest. It's all about those sort of key levels. You can see there's been plenty of opportunities on these levels. Lovely reversal there. You can see lovely reversal candle there. Yes, it was a red body, but a lovely bit of lower wick there, and we've got a quick pop up towards that 200 SMA. So then you can see currently now we're getting capped at the 1300. So interesting chart there, similar to sort of Aussie. Yes, it is chopping around, but there's still some key levels, some nice sort of scalp plays on gold. Actually, one more thing to note about. Bear in mind this is a quite a messy chart. Actually, in fact, I'll just clean this up so you can see this fib move clearer. So yes, in my opinion, I think the bias is towards the upside. In terms of the shorter term time frames, one fib move that's in play, which could be the sort of catalyst for a sort of pop up, is this fib move here. So that's the sort of fib. You can just see I've just drawn that on the 4-hour chart. They're pretty much the low to the high of the 4-hour chart. You can see this 61.8, which comes in at 12.96, is acting as key support, and we're getting a brief bounce up. But of course, with that 100 SMA right there, which has already capped it, so we'll need to get above that. So that's the view on gold. That's the view for all of the charts. Hope you found this video useful. If there's any other pairs you want me to take a look at next week, then feel free to comment under the YouTube channel or send us a tweet to our Twitter feed, which is at MRC_markets. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.